Hey folks, this is Danny at Spartan Invest. Today I want to talk a minute about the CPI report that came out earlier this week. First of all, the CPI number came in at 2.9%. That's the lowest number we've seen since March of 2021. That's good news. Of course, the core CPI number, which strips out food and energy, it was a little bit higher at 3.2%. And honestly, that's what the Fed pays more attention to when they're chasing that almighty 2% number that they've been talking about for 2 years. Now, another number that a lot of people don't talk about is the PPI. Last month, it was a bit of a scary number at 2.7% year over year because they expected it to be a bit lower. This month, that is dropping to 2.2% year over year and a tenth lower month over month. Those are all great things as we see inflation start to calm down. Now, everybody's talking about a soft landing in the Fed, and that's what they're hoping for. With that in mind, some numbers are still pretty stubborn. Housing, for instance, is still around 5%. Electricity is still pretty high. And then there are some things that have dropped substantially, like used cars at over 10%, negative 10%. So things are actually getting cheaper in that specific situation. With that in mind, when you see a 2% number, there's a misconception around, well, things are cheaper in the market. Well, they're really not cheaper, they're just not increasing as fast because that 9% that we experienced a while back is compounding to the 7, 5, and now 2.9% CPI. When you look at investment properties, please look at the full picture and not just one metric. A lot of people are focusing on the Fed and I'll invest when the Fed decreases rates. Well, that's fine and great because if that one metric is all that matters, then yes, you'll get a cheaper home. But what you need to keep in mind is that when rates are decreasing, other people in the market may be waiting on that same factor. And if they flood the market, if there are bidding wars within the market, then that may increase the price that you will pay overall, even with the lower rate. So again, vet the market, vet the property, take advantage of promotions that are currently in the market right now, and you can find a great property and be consistent in when you invest because this isn't a one and done type of investment. If you're looking for long-term rental properties, build something that will help you defeat inflation. It will grow as inflation grows, and that way you can have a property or a retirement, if you will, that will grow with you, a pension that will continue to grow. Anyway, thanks a lot for the time. Have a great day.